Welcome to today's March 10th podcast for the Pacific Northwest Farmers Cooperative Market Update. Quick introductions. I'm Trudi Allenbaugh, and joining me is Shane Rebold and Lane Hannes. I'll do a quick disclaimer as well. The views and opinions of this program are of the hosts and for informational purposes only, and there's substantial risk in trading futures and options, which should be carefully considered prior to trading. Okay, let's get right into it. March 10th, WASDE report. I'm going to do a quick overview, and you guys can jump in, and that's going to take that 30 seconds, and we'll be done with this.
That's right.
Since, it was really kind of a non-event. No changes to U.S. wheat balance sheet. Global wheat outlook or ending stocks were raised or lowered slightly, and one note I can say when gleaning through it was that they did take down Aussie production by 1 million metric tons. Mm-hmm. I think they offset it by Ukraine production increased by the same. But for us in white wheat world, that's a positive note. However, down to a 36 million metric ton is still the third largest harvest or production that they've had on record. So anyway, but less is better all the time. No changes to corn. I really kind of thought that they would, USDA would increase corn exports. Any thoughts on that? Did you think that would they move that number, or should they move that number?
I think it'd be warranted. Corn exports have been excellent here lately, so yeah, I would agree with that statement. So they've still got time.
Yeah, right. It is got early for that too. Nothing changed on corn, and I think there was just a slight tweak on soybeans. So.
Very limited.
Yeah. Anything else to add for the WASDE report?
Not a ton. In soft white wheat specifically, no changes to that balance sheet either. They still have 210 million bushels shown for exports for the market year. If you look at the data that came out last Thursday, we've got a total of 191.9 million bushels in total commitments. 41 million of that is not shipped yet. So that market year will end June
1st or May 31st.
May 31st. So we're already seeing sales for the next market year in the white wheat export category. So we might not make that 210 million. That should, be added back to the ending stocks. Ending stocks right now show at 80 million bushels, or maybe it's 78.
Yeah.
Do you think that number changes if we take the exports down? Is it overstated? We've talked about that a little bit.
I think it's been overstated for a while because I think carry-in has kind of been overstated for the last couple of years. However, that switching between USDA new crop bushels June 1, our white wheat world new crop bushels more into July. They'll do a little adjustment, but I think you'll see the carry-out increase. But
even at that level, the white wheat ending stocks aren't extremely burdensome.
Right.
You've heard us talk a lot about how much wheat there is in the world. That's our go-to when we look at what futures are done and remind everybody there's so much wheat in the world. So I did a little looking around. I went to International Grains Council, found some data that they have. They've got these nice charts with the past 10 years of production for any select country. So I picked the top exporters and two of the other big producers in India and China, and just kind of looked at how big their crops have been specifically in this year. So for this current market year, the European Union, who is typically the first or second largest producer in the world, this is their fourth largest crop in the last 10 years. For China, they are tied for their first largest crop in the last 10 years. India, this is their largest crop ever. Russia, their third largest crop in the last 10 years. The United States, second largest. Australia, third largest. Canada, their largest crop. Argentina, largest crop ever. Ukraine, their major exporter, but they're only having their seventh largest crop in the last 10 years. So the most wheat we've ever grown in the world happened this year.
Yeah.
There's the data behind it.
Yeah, that does a lot to give a good overview of why when we say there's too much wheat in the world. But,
overall production up 3%. Consumption's only projected to be up 1.5%.
And on that happy note,
Shane, what about the Stats Canada report that came out last week? Can you embellish on that?
Yeah, so Stats Canada published increased acres on specifically looking at canola acreage, bumped it up to where's my number? 22 21.8. This is up from last year at a 21.6. Even though last year's production was quite heavy, record on crop acreage per production per acreage, they do expect yields to be down this year. So they are pulling back total stocks back a touch. Domestic use is going to increase due to some crush plants coming online. And that puts exports at the end of the whole ordeal at about 7.5%, which is down a good chunk from last year, even during the year that we had a tiff with China and Canada. So definitely kind of a positive outlook with the Stats Canada. However, there is a little bit of a caveat because their first line right off the bat is farmers expect canola area. So all this data was taken during the months of December and January. So a lot has changed, as everybody knows, in the marketplace, especially here in the last 2 weeks. So it'll be interesting to see what the next one brings.
So we have planting report on the 31st and stocks report. When does StatsCan do their, is it right around the same time, I'm guessing?
Yeah, this one came out on March 5th.
Okay.
So I expect here in April,
Okay. So
early
we'll do
April, we'll have another one,
actual
so on and so
planting.
forth. And they call them a principal field crop areas.
Okay.
This is the,
Yeah, so something that we'll definitely keep
Verbiage.
an eye on to see what kind of acreage they have in
Yeah.
exchange. We've seen a lot of strength in canola.
we have.
Any touch on that?
Hugely. I mean, yeah, we can transfer right into that. You know, it's hard to get a good guy down, and it's been on a tear ever since we bottomed out here a couple months ago. You know, my gut feeling is I just need to quit talking and just watch it, because every time I think we're going to peter out and run out of gas, we climb a little bit more. However, this week or here today is a little bit more. The things have changed, as we've seen. Everybody got a good spike on Monday, and then we kind of ended up in the red. Today, we had a little bit of a pullback depending on which contract you looked at. Nearbys were in the red today. Far offs for new crop, November was in the green by just a couple of dollars, so it was kind of a mixed bag. However, this is the only second red day we've seen since mid-February. So kind of interesting to see if we ran out of gas. We did punch through the November high, contract high, which was $729, and we did hit a high of $746, $747 on that Monday yesterday. It was short-lived overnight, pulled back. We did not close above that, so where she closes is where she goes
Yeah.
maybe. Tomorrow will definitely be a better indication on kind of, can we keep these gains we've had? Do we see a pullback? There is a gap down at 691 to 696. That would kind of be a floor or set of resistance. Maybe we punch back about $20, hit that, and then come back up and kind of trade in our high and our low. That's my goal. We did see cash price shave off 25 cents just based off of today's losses and yesterday's losses. We were able to hold on to them this morning because things were uneasy, especially with that report that U.S. was escorting vessels through the Strait of Hormuz, and then all of a sudden, well, whoops, maybe we didn't do that, and oil was back up, and things kind of were shaky there at the close. So we'll see where she goes.
So you think we've seen some early strength on this new crop price as well, with all the strength in the futures, and I'm assuming some of this, movement of money and this geopolitical unrest. Do you think that these are levels that we should be looking at? Normally, you see kind of the rise in futures for that in that April-May planting. Have we missed our window, or is this just a one-off?
I think we're still here within it. That chart I showed at the grower meeting, we project our highs usually historically or right around that April-May time frame, just before plantings actually do come out of what was planted in the ground. So I think we're a little early. I mean, as in this rally came early. Right. Definitely it's got a 2 in front of it. Let's get a layer on the books. I've been saying that since 19, and I would still stand by that. Just with everything, we're going to see a big crop. We're going to see a lot of acres in the ground. Let's get some layers on the books at these 220 levels. Because honestly, I think we're going to go sideways. My predictions all year have been kind of in this 21 as a max, and we're kind of looking at it. So I'm still in the camp.
There's some potential there with this unrest and whatnot, and some of the volatility to catch some good numbers.
I'll add my 2 cents on what canola's doing here. Just looking at it fundamentally, this is a demand-driven rally. Those tend to stick around a little longer than something like a supply rally, where we've got a drought somewhere and suddenly we can produce it somewhere else and fix the problem pretty quickly. But a demand-driven rally tends to stick around longer. So I think canola is going to be looking good for a while.
Wow.
Cool. Thanks. Yeah, so I'll just kind of segue into cash and futures update. We've really seen the last 2 weeks of talking about everything with the Iran conflict, war, whatever you want to call it. Everything, watching crude oil. Crude oil has really been the leader in this, and as soon as you see that start to run, futures did as well. I had an interesting stat that I was looking at today that kind of just talked about that volatility movement, and it was in the last 2 days, the market has. We've seen on Monday we saw the May futures trade in a 30-cent range. In the last 2 sessions, we've brought back 56 cents. However, you look at the volatility and what's been going on with, again, headlines and equities moving, crude oil. I don't believe this is over. You look at the technically on wheat. Wheat is still trending higher, so there's still going to be some opportunity. Cash, we've seen it go a little bit higher. Everyone's done a good job of rewarding that. This rally for Chicago and all the wheat futures is not demand driven at the time. So take advantage of it when you can. The basis is really weak. If you got some cash, old crap, I think you need to take a hard look at that. At least get some offers in. But yeah, so I don't think this rally is over, but volatility is here to stay.
Yeah, totally agree with you. Operation Epic Fury, since it started, wheat has coupled itself to what oil futures are doing. Money's pouring into commodities because there's something stable that you can physically own. And taking advantage of this price action has, it's been a gift to the farmer. So I commend every one of our members who's participated in the rally and chosen us as your partner to hedge your crop. We appreciate your business, definitely.
Yeah. On that, kind of segue, what's kind of our feelings on the calls?
With their flex contracts.
With all the people that participated.
Yeah, we've had a lot of questions about that here recently with the push higher. We started doing flex contracts in which we sell a call option starting last fall. Some of those strike prices are relatively low. September 2026 contract closed at 618 today. We saw it as high as 660 Sunday night. We've got call options with strike prices of as low as 610. Let's say a guy was paid 25 cents for that 610 call option. When is it going to get exercised? We were all the way up to 660. If it's exercised, whoever sold that call is now having an HTA at 610. I can tell you right now, we haven't had none of our call options exercised. I think it's a function of both time and volatility. We still have, what would it be, 150 days or so until those call options expire. That's a lot of time for the market to continue to go up and for those call options to get further in the money. As of right now, whoever bought those calls from us, they're not interested in exercising them. I think there's still more money to be made. So
I still look at it as a viable option. You raise your strike price. You look where the premium is and how much you get paid for that.
Yeah. This has been a great couple of weeks to start even more flex contracts because with the volatility and where the underlying futures prices are, you can choose higher strike prices, get better premiums. They're still working well.
Yeah, I want to just segue into that with thank you to everybody that made it to our last round of market meetings. If you weren't able to attend, we are going to keep doing more. Obviously, it'll be after you guys are done in the field. But I want to just invite you to, if you want to talk more about flex contracts and futures and getting your orders in, we're always available. We'll come see you. Phone call, text, whatever. But I think it's definitely a market that need to have orders in and things working just because of that, those huge ranges. So, but thank you guys for who were able to attend. So, we talked about the flex. Okay, so closing comments. Anything left to add?
I didn't get that far down on my prep here, but Yeah, just like Trudy said, having orders in with the market doing everything that it's been doing is extremely important. Just like what happened on Sunday night, we were up 20 cents while nobody was in the office. So if you had an order working, it could have filled, and you could have been right there at the highs. What else? Volatility is going to continue. Absolutely. So still opportunities. Let's, I've said thank you to everybody who's participated so far. Don't feel bad if you haven't done anything yet. Now is still a good time.
Yeah.
Excellent. Yeah. Perfect advice, because it is. It's not over. Get your orders in. We're going to be able to participate in this. So I like that you said, I also wrote on my notes, volatility remains and it's not going anywhere. So I mean, I think that's my closing comment too. We're here for you. Get your orders in. We'll manage them through with you, and watch cash too. I mean, it's going to have some strength in it, and just with the futures alone too. So it's not a bad idea if you're on the fence a little bit with options and HDAs, where cash number is something to be watching too.
Yeah, definitely a target rich environment.
Yeah, right.
Good point.
Wheat, we could probably still have a good chance to make a December $7 cash contract with some flex. I mean, their possibility is still out there even after the volatility. So just backing up what both of you guys said. On the canola side, sideways, a little stronger. It's got a 2 in front of it. That's been a blessing from what we've seen the last 6 months. Don't sell the whole farm, but let's get some layers on the books for sure.
Yeah, all eyes will be on the headlines, volatility, and then the next crop report coming out the end of the month, plantings, and stocks report. So we'll be here to give you a report on that. Thank you.
Thank you.
Thank you.